Today is the 6th of March 2021. My name is David Hickson, and in today's market update we are going to be discussing the 20-week cycle trough which we are expecting to form in the markets about now. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. I would like to clear up a little bit of confusion. A few weeks ago I mentioned that I am publishing a book about my approach to applying Hurst cycles to trading financial markets. And this morning I published a very different book. It is a fiction thriller and it has nothing to do with financial cycles. I was contacted by a couple of people who were a little surprised because they wondered whether this might be the book about Hurst cycles. This is not the book about Hurst cycles. I am still going to be publishing a book about Hurst cycles, but that is still in the works. So let's take a look at the markets, and I'm looking at the S&P 500 again because that is the instrument that we've been tracking in these market update videos. And this is the analysis that we were discussing in last week's video. And of course we have the 80-day cycle trough here at the beginning of January of this year, the 40-week cycle trough at the end of October last year, and this big nest of lows over here is the 20-week cycle trough, which I discussed in last week's video, and I explained why I was expecting this 20-week cycle trough to occur round about now. So let's discuss what has happened. And let's also discuss how we will know when this 20-week cycle trough has formed. So let me zoom in and discuss some of the finer details. So let's start with a discussion of the 20-day FLD. The 20-day FLD, you probably know, is one of my favorite cycle tools. The acronym FLD stands for Future Line of Demarcation. It is a tool that Hurst defined, but I use it in a way that I invented or discovered, which has to do with the sequence of interactions between price and this FLD. The FLD is a line which is projected into the future, as you can see over here. It extends beyond the most recent price movement, and we can track the way in which price interacts with this line, which gives us some insight into what is happening in the markets and helps us to trade those markets. So I spoke in last week's video about the fact that this was probably an F category interaction over here, and discussed in the previous week's video the dilemma that we faced at the time, or was it a B category interaction or an F category interaction? But as you can see, price broke down below the FLD, thereby confirming that this was probably an F category interaction. Price came back up to the FLD in a G category interaction, and price found resistance at the level of the FLD, which I discussed in last week's video. It then dropped away from the FLD, which is an interaction, if you like, which we classify as an H category interaction, on its way down to the 20-week cycle trough. But then on Monday of last week, price jumped up very strongly, and I had several emails and comments in the YouTube video asking, does this mean that the 20-week cycle trough has formed? And my answer to that was, yes, it's possible, of course, that the 20-week cycle trough had formed. Well, at least it was possible until the end of last week, but at that time it was possible, it was something to consider, but we needed confirmation that that trough had formed before we jumped to the conclusion that it had formed. I hope that makes sense. And in fact what happened was the price came back up to the FLD and found resistance. In other words, it couldn't get through the FLD again. That is what we call a double GH category interaction. And it is something that occurs so often that in the FLD trading strategy course, I speak about it, and it is something that we are always on the lookout for, because it's a fairly dangerous moment. As you can imagine, we are expecting a 20-week cycle trough to form, and price comes up to the 20-day FLD, and the simple reaction is to say, well, that trough has clearly formed. Look at this amazing particularly strong price movement upwards, therefore that trough must have formed. But in fact, very often you get the double GH category interaction, which is why you need to wait for confirmation that that 20-week cycle trough is formed before you actually go forth and trade on the basis of that knowledge or that information. And so let's delve a little deeper into this, because now we have a new candidate for the 20-week cycle trough, which occurred on Thursday. And you can see that new candidate for the 20-week cycle trough is right above this very neat nest of lows, which is this collection of circles and whiskers for all the shorter cycles. And in fact, it is sitting directly above what might be termed the center of gravity, if you like, of this nest of lows, which was very much at that position where I've drawn that squiggly yellow line. So that is where the nest of lows was telling us was the most likely time to expect the 20-week cycle trough to form. And on Friday, price bounced back up again. And so again, we're faced with a situation of, has the 20-week cycle trough formed or hasn't it? Well, there are several things to consider. The first is it possible that we are going to witness a triple GH category interaction? I've mentioned that we often see a double. Do we ever see a triple? Well, yes, we do sometimes, but not very often. So it is less likely. But at this point, we don't purely follow the sequence of interactions. We know that we are expecting a 20-week cycle trough. We cannot rely on the fact that there might not be a third GH category interaction, because there might be. We need to refer to some other information in terms of determining when that 20-week cycle trough has formed. And so the first thing that we can do is that we can start looking at our FLDs, and let's be logical about this. And first of all, ask ourselves at what point, or I should say at which FLD, would we have confirmation that the 20-week cycle trough has formed? Now, this is going to be quite interesting, because for the confirmation of a trough of a cycle, price needs to cross the FLD of that cycle. Okay, so let's display the 20-week cycle FLD. And there it is on the chart. And isn't that interesting? Because you can see that this potential 20-week cycle trough actually formed at the level of the 20-week FLD. Now, in a few minutes, I'm going to zoom out again, and we're going to take a look at this 20-week FLD, because you must remember there is information to be gathered from each and every FLD. I don't have time in these videos to look at every single cycle, but it's definitely worth looking at the 20-week FLD, so we're going to do that in a few minutes' time. So, has price crossed back up above the 20-week FLD to confirm the position of the 20-week cycle trough? Well, it hasn't really, because it never really dropped below that 20-week cycle trough. However, the formation of a 20-week cycle trough on the basis of the information that we know from the FLD trading strategy, the possibility that the 20-week cycle trough formed at the level of the 20-week cycle FLD is actually really good. So that increases my confidence in the fact that the 20-week cycle trough formed there. But increased confidence doesn't mean that I am yet entirely convinced. What I would like to have is some further information to confirm the fact that this 20-week cycle trough has formed. Now, this is where a very important discovery that Hurst made comes into consideration. Hurst defined several principles. He defined 8 of them, in fact, and one of those principles was the principle of synchronicity, which tells us that the cycles that influence stock markets tend to be synchronized at their troughs. In other words, the troughs of the cycles occur at the same time. This means that the peaks do not necessarily occur at the same time, and if you don't understand that, I would recommend you take a look at the 10 Core Concepts document, which there will be a link to in the description below this video, which explains why, if troughs are synchronized, peaks are not necessarily. Okay, so the fact that these troughs are synchronized means that this 20-week cycle trough must also occur at the same time, or not also occur, but must occur at the same time as an 80-day cycle trough, and also, of course, a 40-day cycle trough. I'm pointing at the circles here, and also a 20-day cycle trough, and a 10-day, and a 5-day. So what we could do is we could say, well, I would be confident that a trough of the 20-week cycle has formed if I have evidence to support the fact that an 80-day cycle trough has formed. Let's just do this one cycle at a time. Okay, so because the 80-day and the 20-week cycle troughs must be synchronized, they must occur at the same time. If I have evidence that an 80-day cycle trough has formed, then I would be confident that the 20-week cycle trough has also formed, because they must have formed at the same time. So let's take a look at our 80-day cycle FLD. And here it is. Now you can see that yet again, price has failed to actually cross down below that FLD. In fact, the midpoint has, of course, and so you could argue that that is a legitimate cross below the FLD. But in fact, I would suggest that price is very approximately finding support at the level of the FLD. And so again, we don't really have enough information. So what we could do is we could step down yet another cycle and say to ourselves, well, if the 40-week cycle trough occurs at this point, then because of the principle of synchronicity, the 80-day cycle trough must have formed, and of course the 20-week cycle trough must have formed. So let's take a look at our 40-day FLD. Now we have an FLD that is useful to us because, as you can see, price has crossed down below this FLD. And if we extend to the target, it achieved that target fairly nicely and cleanly. And when price crosses above the 40-day FLD, we will have confirmation that the 40-day cycle trough has formed in the markets. And because of the principle of synchronicity, we could then say that the 80-day cycle trough must have formed, and indeed the 20-week cycle trough must have formed. Now, we could keep doing this, and we can keep stepping down to lower and lower cycles. Our next cycle is, of course, the 20-day cycle FLD. And so when price crosses above this FLD, which it might do next week, then we would have confirmation that a 20-day cycle trough had formed, and by the principle of synchronicity, troughs all the way up to the 20-week cycle. But now at some point, as you can imagine, we need to draw a line, because we can't go all the way down to a 30-minute cycle and say that because of the principle of synchronicity, therefore the 20-week cycle trough must have formed. So how far down do we go? Well, as a general rule of thumb, and let's zoom out on this chart, what I do is I work out my level of confidence in terms of whether a trough is really due to have occurred. And that is why I have these bar counts on my chart. You can see there have been 126 bars from the trough at the end of October. Now the average length of a 20-week cycle is 136 bars. So we are still 10 days early for the 20-week cycle trough to have formed. Similarly, there have been 60 bars since the most recent 80-day cycle trough, which I have phased over here at the beginning of this year. The average length of an 80-day cycle is 68 days, and so we are also a little bit early in terms of the 80-day cycle trough forming. The 40-day cycle has had 32 bars elapse since the most recent 40-day cycle trough at the beginning of February. The average length of a 40-day cycle is 34 bars or 34 days, and so that trough is only a few days early if it has already formed. So what is my level of confidence? Well, I am confident down to the level of the 80-day cycle trough. If price crossed that 80-day cycle FLD and thereby confirmed the formation of the 80-day cycle, I would be confident at that level. But of course we don't have that opportunity because the 80-day cycle FLD is not in a position to do that for us. However, if price crossed the 40-day FLD, then again I would be confident that a 40-day cycle trough had formed, because it is only a couple of days early. And if we look at the bottom right of the chart over here, we can see the recent average wavelength of these cycles has been running short, something I've discussed in the previous videos. And so in fact the average length of the 40-day cycle would be 31 days, and 31 days was exactly 1 day before the last day of data, which was of course on Thursday. And so if the 40-day cycle trough did occur on this Thursday, it would have come in at an exactly regular and consistent recent average of 31 days. And so I have great confidence in the 40-day cycle. What about the 20-day cycle? Well, the position of the most recent 20-day cycle is really difficult to identify in recent price action, and so my level of confidence in the 20-day cycle position is not very strong. However, at this point, if price crosses the 20-day cycle FLD, I would be confident that a 20-day cycle had formed, and also very confident that it would be the second 20-day cycle trough that had formed since the 40-day cycle trough at the beginning of February. I do hope this is making sense to you. I don't want to confuse you by all of this, but this process of stepping down to shorter and shorter cycles in order to identify the formation of a longer cycle trough in the markets is a really important one. It lies at the heart of working with the Hurst Cycles approach in terms of trading the markets. Now, the FLD is not the only tool that Hurst defined. He also defined a tool called the valid trend line. And we can also use the valid trend line to confirm that a particular trough has formed in the market and also to make trading decisions. So let's quickly take a look at the valid trend line. This is the VTL for the 20-day cycle. You can see they are color-coded, of course. It's the same purple color. Now, the way that a VTL works is that when price crosses above the 20-day cycle VTL, it gives us confirmation that a cycle with a magnitude of 1 degree larger than the cycle upon which the VTL is based has formed in the market. In other words, when price crosses the 20-day cycle VTL, it gives us confirmation that a 40-day cycle trough has formed in the markets. And again, we apply the concept of how confident we are whether a confirmation of the 40-day cycle would also mean a confirmation of the 20-week cycle trough. And as I've mentioned, I am very confident at that level that if a 40-day cycle trough forms here, it will also be a trough of the 20-week cycle. And so we have a different level to watch in terms of confirmation of that trough forming. And if we display both the 40-day FLD and the 20-day VTL, you can see that this general area, although each tool provides slightly different levels, of course, on each day, that general area provides us with confirmation of the 40-day cycle trough having formed in the markets. But now my confidence extends a little deeper than the 40-day cycle level. As mentioned, I would be fairly confident that if the 20-day cycle formed a trough in the markets, that would be confirmation that the 20-week cycle trough has also formed. And of course, we would get information about that when price crosses the 10-day cycle VTL. If you don't understand that, then go back and just listen to what I mentioned earlier about what price crossing a VTL actually means, because when price crosses the 10-day cycle VTL, it provides us with confirmation that the 20-day cycle trough has formed. And because of my confidence in terms of this analysis and expecting the 20-week cycle trough to form synchronously with that 20-day cycle trough, I would then be confident that the 20-week cycle trough has formed. And so watching this 10-day VTL provides us with another level for determining when that 20-week cycle trough has formed. Now, I mentioned earlier that the 20-week cycle FLD makes for an interesting study, so let's quickly do that. The FLD trading strategy works with most cycles. It does require a few things, such as a 2-to-1 harmonic ratio for several cycles above the cycle in question. But let's quickly go through the sequence of interactions between price and the 20-week cycle FLD to see what we are expecting next. First of all, the 20-week cycle FLD sequence of interactions starts from a trough of at least 18-month magnitude, which is of course the magnitude of that trough in March of 2020. And so our first interaction is following that trough where price crosses up above the level of the FLD, and we project a target to the upside, and just very roughly just estimating that target would have taken us somewhere over here. And so that was our A category interaction. Then, at round about the time that the first trough of the cycle upon which the FLD is based is formed, we expect price to come down and find support at the level of the FLD. That is called a B category interaction. And you can see that price came down and didn't quite make it all the way down to the level of the FLD. Was that surprising? Not really, because there was a lot of bullishness in this market because of the fact that the trough in March of 2020 was certainly of greater magnitude, or I should say almost certainly of greater magnitude than 18 months, as I have discussed in previous market update videos. According to this analysis, it was 54 months. As you know, I think it was probably at least a 9-year cycle trough that formed at that time. And so the fact that it didn't quite make it all the way down to that FLD revealed the bullishness in that market. The next interaction is, of course, the C category interaction, where price pulls up and away from the FLD, often giving us a good profitable trade. And the next interaction is where price comes down and crosses below the FLD on its way down to a trough of the 40-week cycle in this case, and that is a D category interaction. Now, I don't want to make this video too long, but you can see that price did an interesting thing. It came down to the FLD and found support at this level over here, bounced up again, failed to make a new peak, and then crossed down below the FLD. What that actually meant was that the level of the crossing point was over here. And let me just see if I can erase that line, because that was a mistake. There we go. And so the actual level of that cross was over here. I hope you can see that. At this point over here, price found support at the level of the FLD, and it finally crossed it only over here. So we generate a target from the peak to the crossing point downwards, and price achieved that target over here. You can see that was a disappointing downward move, but not very surprising given the bullishness that was obviously present in the market at the time. The next interaction is, of course, the E category interaction, where price crosses back up above the level of the FLD, and it usually rises up and achieves that target, which it did over here. Now, the next interaction that we are expecting is the F category interaction. And so we are expecting price to drop down below the FLD and head down towards this 18-month cycle trough, which we are expecting, as mentioned in my previous market update video, or perhaps it was the one before that. I failed to remember now, but we're certainly expecting that towards the middle of this year, perhaps the later half of this year. That is the F category interaction. Now, let's just speak about what has happened right now. When we were zoomed in a little earlier, I pointed out that price has found support at the level of that FLD. Does that mean that it's going to fail to find support and it's going to plunge down in an F category interaction? Well, not necessarily. The FLD is a really fascinating line, but it's not an absolute science. We get a very regular sequence of interactions, but occasionally price will come down and find support at the level of the FLD in an interaction that does not fit into our sequence. So in early February, of course, when only a 40-day cycle trough formed, price actually found support at the level of the 20-week FLD. How does that fit into the sequence of interactions? Well, it doesn't really. An FLD is a line that will provide support and resistance at various times. Usually that fits into our sequence. Occasionally we get price jumping down to an FLD or reaching up to an FLD, struggling to get through it in an interaction that doesn't really fit into our sequence. And the interesting thing about what's happened with the 20-week FLD, and let me clear some of this, is that that has happened a few times. And let's zoom in here and we can look at this in just a little more detail. It happened over here as well, where price came down, found support at the level of the 20-week FLD, not just once, but 1, 2, 3, 4 times, and then it only finally crossed below it at this level over here. So what is going on? Well, what is going on is that we are looking at this chart with daily bars, and the FLD that we are looking at is a 20-week FLD. What we should really be doing is looking at weekly bars on our chart and considering the 20-week FLD on a weekly basis. But even watching a daily chart with such a long FLD, you will find that the FLD is remarkably accurate in terms of providing levels of support and resistance. What has been happening here? Well, very similar to what happened previously. Price came down, found support at the level of the 20-week FLD in an interaction that is not really part of our sequence. It has again found support at the level of the FLD. Remember that we are expecting an F category interaction next. Does that mean that price is going to turn around tomorrow? No, because we are expecting a 20-week cycle trough to form round about now. And a very good time for that to happen would certainly be at the level of the 20-week cycle FLD. But what does it tell us? Well, it tells me that we are expecting price to bounce out of the 20-week cycle trough, but it must fairly soon turn down again and cross below the 20-week FLD, and that will be the interaction that we will label as our F category interaction. And of course, history is repeating itself. Because if we jump back in time, at this point you will remember we were expecting a D category interaction, and price came down to the FLD and found support there. Then it found support again and again, and it only finally crossed below it over here. And this was the point that we labeled the D category interaction and worked out our target for the downward move. And so, in my opinion, something very similar is happening at the moment. In terms of price finding support at the level of the 20-week FLD, it is likely to bounce out of this 20-week cycle trough once we have confirmed that that trough is in position, but it will then turn down and form an F category interaction as it heads down into the next 18-month cycle trough. Let me display one more thing on this chart, the composite model line. There is the composite model line, which you can see is telling us to expect, on the basis of the analysis at the foot of this chart, that price is going to bounce out of the 20-week cycle trough. That's this upward move over here, but it is likely to peak fairly soon, and according to this composite model line, not make a new peak, although a new peak is possible, it's not out of the question, but then it is going to turn down and cross below the 20-week cycle FLD on its way down into the 18-month cycle trough. I do hope that you found this market update interesting and that you are getting an idea of how one needs to apply a thinking process to applying Hurst cycles to analyzing and trading financial markets, which is of course why the software that I created that helps you to do this is called Sentient Trader. If you have any questions, please add them to the comments below this video. I look forward to hearing from you.